I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Tesla's next chapter. The car maker aims to raise $2 billion in new capital after Musk repeatedly said he no longer needed it. Plus, Microsoft's big bet on the cloud. We'll speak to the man in charge of Microsoft's most lucrative business, Scott Guthrie, Executive Vice President of Cloud and AI. And Facebook bans controversial right-wing personalities from its platform, saying they violated policies on hate speech and violence. We'll tell you more. But first, to our top story. Just last year, Elon Musk was certain that Tesla would not have to raise any more capital. Now, he's having a change of heart. Tesla is trying to raise about $2 billion to replenish its cash stash. The electric car maker has filed to sell 2.7 million shares and about $1.3 billion in senior convertible notes. To talk about this, I want to bring in our Bloomberg cross-asset reporter, Luke Kawa, and here in San Francisco, Bloomberg's Dana Hull, who covers the company for us. So why suddenly the change of heart?
So Tesla had a really terrible first quarter. Their cash fell to the lowest position in 3 years. And, I think any executive wants a good buffer. I mean, it's scary to kind of be close to the razor's edge, especially when you have a lot of ambitious projects on the docket.
But Luke, how could Musk have underestimated so much how much Tesla would need?
Yeah, that's a question that should be asked today and is being asked today, but the overwhelming sense is just more of relief that, he was able to come to his senses and realize that, there was a need and this happened. That's what Wall Street is essentially saying today, and that's why you see, the reaction in the stock. But Dana, you can correct me if I'm wrong. This almost seems something like we need to be going back to the well, because I think this doesn't do much more than essentially plug the working capital gap. So in terms of ambitious CapEx plans that they might have going forward in different business lines that Elon Musk has said they might get into, it seems like more capital or a real turn in that free cash flow generation that they haven't been able to pull off is in order.
Would you agree?
Yeah, I mean, they're just not selling enough cars at high volume yet. They still need money until they reach these high volumes. They only delivered 63,000 cars in the first quarter, which was much lower than people had expected.
So I have a chart here in the Bloomberg which shows Tesla's free cash flow, and you see a dramatic change from the quarter at the end of last year to the first quarter of this year. What happened here? So they paid off some debt.
Well, they paid off a $920 million in debt. So that was a huge payment that really was a drain on the first quarter.
And that tied with the
lower than
not
expected
great results.
Yeah.
So, Luke, talk to us about a little bit more about what these offerings might look like.
So essentially, a Tesla really, if we're to go back to the junk market and it's a triple C credit, it would probably be a little too expensive. So these are some senior convertible notes, and the coupon is apparently fairly normal at pricing. Talk is about 1.5 to 2. But the bigger thing and the fun thing today to watch was that the converts will mature in 2024, I believe. Yet Tesla has 2025 obligations that are outstanding. And in terms of spread tightening, this was one of the best days for this issue on ever. So it's the idea that even though these mature after, potentially these would have to be paid back if the converts don't kick in, if you don't get that big equity rally that people will probably be going into it for. It's unclear how much this really does improve the position for the 2025s, but investors are certainly just saying, hey, we're happy you got more money.
So, Dana, more broadly, what is Tesla's plan to become self-sustaining over the longer term?
Well, they're no longer really talking about that. I mean, now Elon Musk is talking about being cash flow neutral while they ramp up this fleet of autonomous robo-taxis, and the whole kind of pitch for the company has shifted a little bit from bringing the Model 3 to the masses to our autonomous future, and that's going to be a very expensive endeavor.
How are analysts reacting to this, Luke?
Well, it's a bit of a mix, but even the most optimistic one. So Dan Ives recently, downgraded the stock after he called the earnings call recently and the earnings release a debacle, and he was positive on this release, but he was going, it's a good start. You'll probably need to get more. And then on the other side, there's a Wolf Research analyst that essentially said, the reason for the raise, he just can't get to a way that Tesla could be cash flow positive, and so essentially the reason for the raise is enough reason to be even more bearish or less bullish on the stock. But the market voted today, and I'd say that represents the sigh of relief. The better late than never is the prevailing sentiment right now, at least in stocks and bonds.
Dana, Tesla's always had its fervent bulls and bears. I mean, do you see a real sentiment change in the folks who follow this company, or is it still...
Oh no, like everyone is still
very
entrenched,
polarized,
hunkered down in their bunker, very polarized. But to Luke's point, I mean, the stock did rise today, but it's still off by what, more than, I mean, I haven't checked lately, but I mean, it was down like 30% yesterday. It's risen a little bit today, but it is nowhere near its all-time high, and they have a lot to do. They have a lot to do this year.
All right, Dana Hull and Luke Kawa for Bloomberg will continue to follow. Dana, you're on the Tesla roller coaster every day. All right. Well, the U.S. Defense Department faces new pressure from Congress over President Trump's proposed Space Force. The Pentagon has asked for $72 million in initial funding for the program. Lawmakers say they need more information about why the new service is necessary. Military leaders testified to the Senate Armed Services Committee last month about a potential Space Force in an attempt to address concerns and build support. The hearing may have only fueled skepticism, however, among lawmakers. Coming up, Microsoft's cloud business is on the rise, but can it manage to hold its own against market leader Amazon? We're going to hear from Microsoft's top cloud leader, Scott Guthrie, next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Next week, over 6,000 developers will head to Seattle for Microsoft's Build conference, where they'll get a first look at the company's latest development tools and cloud services. Ahead of the conference, the company is announcing a series of new Azure services to create the next generation of so-called intelligent cloud. The cloud is becoming a primary driver of Microsoft's revenue growth as it continues to take on rivals like Amazon and Google. The company recently saw a 73% growth in revenue in its Azure business and expects intelligent cloud sales to hit as much as $11 billion this quarter. Joining us to discuss, Microsoft's Executive Vice President of Cloud and AI, Scott Guthrie. Scott, thanks so much for being here.
Thanks so much for having me, Emily.
So you were Satya's number 2 in cloud for a long time before he became CEO, and then he asked you to run this division. Tell me a little bit about that conversation.
Well, I've been fortunate to work with Satya for a long time, and he and I worked on Azure and the cloud business. And so when he became CEO, or the day before he became CEO, we had a conversation, and I took on what was his role.
What did he say?
Well, we've worked so closely together, so it was a pretty quick conversation. And the company as a whole has been going through this cloud transformation, so it's been incredibly fun to be part of, and then more importantly, helping our customers through it. And it's been a great ride.
Yeah, in the break we were talking about 7 to 8 years ago, the Azure business didn't really exist. So it's a fairly new business, yet it has grown really fast. And you made a big decision a few years ago to focus on cloud, shift a lot of workers and resources there to this area that was making like millions of dollars from areas that were making billions of dollars. You're an engineer by training. How did you make that decision? What informed that?
Well, I think in technology, things move fast. And, the most important thing is trying to understand where is the hockey puck going and how do you skate to it. And as a company, we'd missed a couple of trends, which is widely known. And we saw cloud and said, this is a trend we're not going to miss. And, more than just a technology shift, we also see every customer out there is looking to reinvent themselves and do digital transformation, and cloud is integral. And, I think we were able to execute very well. It aligns incredibly well with what customers are looking for. And it's been great to see the success both of their businesses, but then in turn with ours.
How do you compete with Amazon when they got a head start 4 years earlier in this business than you did?
Well, I think the thing that we focused on is how do we really focus on the enterprise market and the startups and ISVs that target the enterprise market. And I think that was something that we did early on, whereas Amazon had focused more to begin with consumer startups. And it's allowed us to play to our strengths around hybrid, which is a key differentiation we have versus other cloud competitors. And it also allows us to really look at the Microsoft overall cloud portfolio, which is not just Azure, but also Office 365 and Dynamics 365, and bring a really unique set of offerings to bear that Amazon and other cloud vendors don't have.
Now, are you taking business from them? Are you attracting customers that they have to your platform, or are you mostly winning new customers that are new to the cloud entirely?
We see both. I mean, I think we definitely have a number of very large customers that have switched to our cloud with Azure. And then, what we also see is just the market has been growing, and I think we're taking a disproportionate share of the growth, and that's been driving our overall cloud momentum. And the market is still fairly new, and it's not anywhere near over in terms of its growth phase. And so, the thing that we get energized around is just the tremendous opportunity that's ahead, not just again to grow our business, but more importantly, grow our customers' business as we enable them to do more and take advantage of the cloud to reinvent themselves.
So do you see the pie getting bigger? And if so, how much more of the pie will you have in the future, in terms of a percentage? If Amazon is many times bigger than you now, what does that look like in 2, 3, 5 years?
Well, I don't think Amazon's many times bigger than us now. Maybe 7 years ago they were. But now I think if you look in the enterprise market, most people have us pretty darn close in terms of overall cloud share for businesses. Again, we see the opportunity ahead as really enormous market, because everything is moving to cloud over time. Not just the traditional IT workloads, but cars, retail facilities, manufacturing, a bunch of technology that we never had any participation in terms of the core business is now really being cloud enabled, and I think enables an enormous market out there.
I know it's not a zero-sum game, but is this a market where you feel there will be one clear leader, or where there will be many leaders?
I think there'll be, I don't think there'll be one. I think there'll definitely be several. And it's probably $1 trillion market, so it's a very big market. And the thing that we're uniquely focused on is, how do we have this sort of unique value proposition that really makes our customers successful, and really honing that down, I think, is the most important thing. I think we do that, we're going to have a big business, but I think others will have successful businesses as well.
You're now, as a result of this business, managing high-stakes events like Black Friday, or on another end of the spectrum, elections. How do you keep up, especially when there are constant threats in cyberspace?
Well, trust is something that we focused a lot on with Microsoft over the last couple of years, and it is around how do you provide the reliability that customers need, how do you provide the security, including cybersecurity, which is obviously of paramount importance, and then also just from a compliance and regulatory perspective. We're in a dynamic, changing global world where new regulations, new data sovereignty needs are popping up. And we're really focused on how do we deliver trust as a clear differentiation of our cloud. And we know it's integral to success going forward.
Microsoft has played an important role in making the public aware of Russian threats online. You said earlier this year, Microsoft did that. Some of your accounts had been targeted, think tanks targeted by Russian intelligence to sort of undermine some of their activities. How critical has the cloud team been in managing those kinds of threats?
Well, I think the opportunity that the cloud gives is much more signal on what's happening, and also the ability for us to help our customers understand how they're being attacked.
So by signal, are you saying you're detecting some of these?
In a lot of cases, we're detecting it. We're able to use our AI technology and some of our more advanced security capabilities to actually tell customers when they're being targeted or attacked. Hopefully not successfully, but even if they're actually being targeted. And part of what we've rolled out is actually capabilities where we can proactively tell customers when we suspect someone is probing their environment, or trying to compromise their emails or compromise their environment. And that's a big differentiator, where I think a lot of enterprises in particular are now realizing the cloud can help them be more secure, because they can actually get more intelligence than what they used to be able to have inside only their own data centers.
Employees at Microsoft, like we've seen employees at Google and Amazon, have protested their company's work with the government. Microsoft has made it very clear, Satya Nadella has made it very clear, Microsoft is going to work with the government. How do you draw that line in terms of values of what customers you will and will not work with?
Well, I think one of the things that we've been very focused on has been around, let's be principled about it and not try to make a individual decision on a case-by-case basis, but instead really publish our principles. Brad Smith, who's our president, published a good blog post which really listed in very clear terms, here are our principles, here are our rules about AI ethics, and we're going to be principled and make sure we stand to those rules. And we obviously are all citizens of our government, and we're an American company, so we do want to make sure that our government in particular, we can help and assist. But we're going to be very clear as we do it and very principled. And we found that resonates pretty well with our employees. And I think it's an important debate that we want to make sure that we have both with society, but also with our employees as well.
Now, Bloomberg has reported that Satya doesn't want the executive focusing on the market cap, most valuable company, $1 trillion market cap or not. How do you not focus on it? And do you really not pay attention to that stuff?
Yeah, that's something I think a lot of people get surprised about, that we don't focus, we don't have a party or anything like that. It's, at the end of the day, it's the thing that matters is our customer success and being laser focused on our customers. And I think Satya has spoken pretty eloquently, which is when you start believing your own hype or you start celebrating your own success too much, you lose sight of what's important. And we're really trying to culturally make sure, because we've been on a journey the last 20 years, we've seen the highs and the lows and the highs.
But on the day you became the world's most valuable company, wasn't that like kind of a cool day?
It honestly wasn't any different than any other day, which I know everyone finds surprising, but it's staying humble, staying focused, and again, really making sure we put customers at the center is the reason we got here, and it's the only reason we'll stay in the position we're in, and so we're going to stay focused on it.
All right, Microsoft Executive Vice President of Cloud and AI, Scott Guthrie.
Thank you
so
for having
much
me.
for stopping by. Coming up, it is the hottest IPO of the year, and it is not Uber, not Lyft, it's not any other tech company. In fact, it is Beyond Meat, and it's grilled up one heck of a public debut. We'll tell you how next. They went up like 100. Jeff Bezos' Blue Origin successfully launching and landing the 11th of its new Shepard launch system. This was an unmanned test flight, and it could have major implications for Blue Origin as it competes with the likes of SpaceX. This is getting the space exploration company one step closer to launching humans into space. While the flight's payload contained NASA equipment to test weightlessness, Blue Origin hopes to one day send paying customers up, and away, and hopefully back again. In a year when all eyes are focused on tech IPOs, it's the public debut of another kind of company that's gone, well, beyond all expectations. Beyond Meat, makers of a plant-based, meat-free meat, seeing its value soar 163% in its IPO on the NASDAQ, leaving it with a valuation of $3.8 billion. That means it's the best debut since the financial crisis. CEO Ethan Brown spoke with Bloomberg after the bell closed from the NASDAQ on a day that was indeed quite rare.
I'm someone who really understands and believes in the role that meat has played in our evolution and our culture today. It did so much for us as we evolved as a species. So my sense is that we're not going to stop eating meat, but I do believe that we can transition people from a animal-based meat to a plant-based meat. And so the consumers that are buying our product today, this is a really interesting statistic. If you look at the consumers in the nation's largest conventional grocery that are buying our product, 93% of those consumers are also putting animal protein in their cart. So they're putting in maybe salmon, maybe poultry, and then beyond. And that's exactly where we want to be. We want to help them to transition into a product that's going to be maybe a little better for them and better for the earth, but do it in a way that's seamless. This is about enabling people to continue to eat what they love. If you love burgers, you can have more rather than less because you don't have to worry about any cholesterol or carcinogens or anything of that nature. If you love sausage, the same. So that's really the value proposition behind the company versus catering to a smaller subsegment of the population.
Well, let's talk about the grocery environment here, because I was in the grocery store this weekend. I went down the aisle. They had all of the vegan burgers and meat substitutes, and there were probably a dozen brands there. And I'm just wondering, how is Beyond Meat going to sort of differentiate itself or stand out from what already seems to be a pretty insanely crowded grocery shelf?
Yeah, so I think the first distinction would be, we have really been pretty adamant with the retailers that we need to be in the meat case if we're going to sell into their stores. So while some will put us both in the meat case and the meat alternative section as well, our home really is in the meat case. And something really spectacular happened to us in that meat case in Southern California, again at the nation's largest conventional grocer. Over the summer, we became the #1 selling packaged burger product in the meat case. So we were outselling Angus, we were outselling 80/20 beef, and this is at a price point that was significantly higher than those other products. And so my belief is that as we continue to improve the product, as we continue to work on pricing, et cetera, we'll capture more and more of that market share. Why are we different? I came out of the clean energy space. I was working for a long time in that space. And when you have a global problem, such as one we have today with rising population and the type of protein that we're consuming, the impact on the earth, the impact on our bodies, you need to spend like it's a global problem. You need to bring big solutions. You need to make big plans. And so what we've done is we've really said, okay, let's get the best scientists, the best engineers, the best managers. Let's fund them properly as if it's a global problem. And then let's get out of their way. Let's give them that clear goal of building meat-directed plants and support them along the way. And they've done a fantastic job of responding to that challenge. We've got many years ahead of us to keep perfecting the product, but so far we're off to a good start.
You've got now $241 million to be able to spend potentially. As I hate to reiterate, you could have got a lot more. But with that money to do R&D now, how quickly can you bring more products to the market? How quickly do you want to? Is there a need right now, Ethan?
So our innovation platform is called the Beyond Meat Rapid and Relentless Innovation Program. And the goal there is to work as hard and as quick as we can to make the products that are currently on the shelf today obsolete. And we do that for a couple of reasons. One, we feel there's urgency to what we're doing. The consumer's demanding this from us. They're coming to us in droves each time we make the product slightly better. And then second, we recognize there's competition. But we want to be innovating so quickly that if you're trying to copy what we're doing, which there are some trying to do that, they'll be chasing a ghost because we moved on to really the next platform and the next product innovation. So it's my goal to have a new product on the market every year. Whether or not we'll hit that on a year in, year out basis, we'll see. But that's the frantic pace of innovation that we need to maintain to deliver against this promise.
Beyond Meat CEO there, Ethan Brown. Up next, we're talking about Facebook banning more far-right agitators from its platform. We'll discuss next. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Now to a story we are following: the fight against online hate speech. Facebook has said it is banning far-right provocateurs and conspiracy theorists, including Alex Jones, Milo Yiannopoulos, and Laura Loomer. They are just a few in a group of people that Facebook says violate its policies on hate speech and promote violence, saying, quote, "We've always banned individuals or organizations that promote or engage in violence and hate, regardless of ideology. The process for evaluating potential violators is extensive, and it is what led us to our decision to remove these accounts today." The company is also blocking religious leader Louis Farrakhan, who is known for sharing anti-Semitic views. To discuss, we've got Bloomberg Tech's new social media reporter, Kurt Wagner, with us. Kurt, good to have you with us.
Hi, thank you for having me.
So walk us through Facebook's decision here. Sort of an abrupt decision to ban a number of people at once.
Yeah, that part is definitely a little abrupt. This has been a long time coming, and a lot of people would say it's about time that a lot of these people are booted off. But what's interesting is that they don't really have a super clear, like, here's pointing to exactly why we're doing this today versus a month ago or 6 months ago. But really what it comes down to is these people have been violating Facebook's terms of service for a long time, and they finally just decided to do it all at once.
Right, and we got this news under embargo. Facebook actually
Yep.
made an announcement about this. They wanted to
It was
make a statement.
coordinated, yeah.
So what do you make of that?
Well, I think there's been a lot of criticism from people. They get it from both sides, right? It's either, hey, you're kicking people off and therefore you're not upholding free speech, or it's, hey, you're letting these people stay on and say these terrible things. Don't you have some policies that should, they should be violating? And so I think the company here is trying to kind of show people that, there is a line that you can cross, and they are going to put their foot down at some point.
Facebook banned Alex Jones last year and
Yes.
InfoWars. So what's different
Yeah,
today?
it's a little complicated, but they banned Alex Jones's fan page and they banned the InfoWars media page, but they did not ban Alex Jones, the individual. So he was still able to use Facebook in the same way that you or I might be able to use it as a regular user. They're now saying that's out too. You can't use Facebook or Instagram at all.
Right, he's off Instagram as well.
Correct. Yeah, this is Instagram too.
Now, some folks have been saying Louis Farrakhan doesn't seem to fit into this group.
Yeah.
What do you make of that?
Well, he's not far right in the way that others who are banned are, but he was doing a lot of the same stuff in terms of the hate speech. And so I think what you see here is maybe an example of Facebook trying to say, listen, this is not just targeting one side of the political spectrum. We're, banning people regardless of where they fall politically, so long as they are still sharing these kind of beliefs that don't align with our policies.
Now, Twitter's also banned Alex Jones.
Yes.
There was obviously a lot of controversy around that. But are these folks that are also banned on Twitter in general?
Some of them are, not all of them. Alex Jones, Milo Yiannopoulos is also banned on Twitter. Those happened a while back. They were a big deal at the time, and then you kind of, I don't want to say forget, but you do. You kind of just forget that they're no longer allowed on there. I wonder, and I believe probably the same thing will eventually happen with Facebook.
And as I understand it, it's not just about what they say on Facebook, right? If they
Correct.
say something on YouTube or at a rally, that could also influence Facebook's decision, right?
Correct,
Which
yeah.
is really interesting.
It is, because then it puts Facebook in this position where all of a sudden, what is it going to be, following everybody around every day and finding out what they do in their personal life. But what's interesting is they kind of categorize these people in the dangerous person category, in the same category maybe like a terrorist organization might be in. And so if you are a terrorist organization and you're promoting violence offline, you can be removed from Facebook in the same way that if these folks are promoting violence offline, they could also be removed.
All right, Bloomberg's Kurt Wagner, you're going to be back
I
a
will.
lot.
Thank you very much.
Good to have you with us. Okay, another story we are following, the growing voice of employee activism in Silicon Valley. Among the things protested have been military contracts, sexual and racial discrimination, working conditions. Remember Google employees across the world walking out in protest over the payout to Android co-founder Andy Rubin after he was credibly accused of sexual harassment and then paid a handsome sum. Well, now these employees are saying that Google, some of them, is retaliating against them. And on Monday, they made it known that they won't sit back in silence over alleged corporate punishment. One group in New York called Google Walkout for Real Change tweeted a photo of employees at a sit-in with all the faces blurred out and included the hashtag, Not okay, Google. To tell us more about this, Bloomberg's Josh Idelson, who's been covering this story. So Josh, tell us about this good old-fashioned sit-in.
We saw in more than a dozen offices around the country, Google employees, in some cases by the hundreds, holding sit-ins at 11 a.m., their local time, all around this theme of wanting Google to continue making progress towards meeting the demands of that walkout 6 months ago and not retaliating against people who are involved in it or involved in instigating it.
So let's talk about some of the more specific instances of alleged retaliation. You have two of the organizers of the Google walkout who said they were either demoted or they were told their work was no longer necessary. What do we know about these cases?
So in one case, someone who was told the AI ethics work that they had been doing and getting recognition elsewhere for doing was not going to be a fit anymore. In another case, someone who said they were demoted and told that they had to go on a medical leave that they did not in fact need, and then after bringing in a lawyer was able to get that reversed. These are examples that were shared on an internal Google fora and have drawn attention because they involve 2 of 7 key people in organizing the walkout, and those are 2 people who are still at the company. there's also
Now,
been a slew.
Go ahead.
There's been a slew of other allegations that have been shared by organizers, in some cases shared anonymously by the organization online, people talking about managers who treated them differently, for example, after they didn't express a positive view of how they were being managed. And these activists have alleged that there's a real culture of retaliation and intimidation at Google.
Now, I did ask Alphabet CFO Ruth Porat in my conversation with her right after earnings about this situation, and she said to me, we have a strong policy prohibiting retaliation in the workplace. We investigate all allegations and give employees multiple ways to report. We're focused on making this the best workplace possible. We have a statement today from a Google spokesperson that is very similar, and Google did add a new avenue for complaints of any kind recently in response to some of these protests. But is Google saying anything else? Are they saying anything about these specific cases or this protest in particular?
Google has said regarding the cases we talked about, the specific ones involving these two leaders, that there was not retaliation here. And as you said, they have said throughout that they do not retaliate. Keep in mind, federal U.S. labor law bans companies from retaliating against workers for their involvement in trying to organize around their working conditions. People often think of that as a law that's about unions, but it's actually a law that is much more broadly about worker activity, worker collective action tied to all kinds of issues in the workplace. And so we have seen examples of workers going to the National Labor Relations Board, filing charges alleging that there has been some form of retaliation. Another one of those, we broke news, was filed just in the past several days. And so this will be fought out in that forum as well as in the public forum, where, of course, the idea of Google as a retaliator really clashes with the image that Google has cultivated of itself and the image that a lot of employees historically have had of Google as well.
Meantime, union workers were spotted handing out flyers outside of Facebook's offices in San Francisco. What can you tell us about that?
That's right. There's an allegation being made in leaflets by organizers at Facebook that these subcontracted cafeteria workers have been retaliated against for their activism. These are workers who won a union, and this is one of a slew of victories for hospitality and service worker unions in the Bay Area, organizing not people who are considered employees of these tech companies, but subcontracted workers who other companies provide to those companies. So people like shuttle bus drivers, cafeteria workers, and in fact, some of these companies have moved towards facilitating or staying neutral or giving their blessing to those subcontracted workers unionizing. Here's a case, though, where some of those workers are saying that that vendor company then retaliated against them.
Now, it's always difficult to gauge how much protests like this represent sentiment at the entire company. And I've certainly talked to employees at both Google and Facebook who say these are pretty good places to work. I'm sure you've had some of the same conversations. Sort of, how do you reconcile what some of these folks are saying with the folks who say, look, we have it pretty good?
Well, a place can be a great place to work and also have serious problems that need to be improved. As you said, we don't have a scientific poll. Some people may not see much of a reason, and certainly when I was at the Bay Area Google headquarters yesterday watching people go in and out of the building where the sit-in was happening, there were employees walking around not being involved in it. That said, there is a lot of people who have participated in this activity, hundreds of people each in several offices. And this is something that, whether you are a fast food worker or a retail worker or a well-compensated software engineer, is a big deal to be involved in collective action and protest. And when people choose to do that, it usually means there are other people who haven't taken that step yet who have some similar concerns. And we've seen here that people who were leaders in the walkout, in some cases, have been leaders in other ways at Google, leaders in ways that Google historically has supported, and people who used to have a more rosy view of the company.
All right. Well, it's certainly fascinating to watch this worker activism continue to unfold, and I know you'll continue to cover it for us. Bloomberg's Josh Idelson, thank you. Coming up, another strong quarter for mobile game maker Zynga. But can the company sustain its growth as companies like Google and Apple push further into gaming? We'll talk about that next. This is Bloomberg. President Trump met with Foxconn chair Terry Guo Wednesday as the billionaire looks to become Taiwan's next president. Bloomberg is reporting Guo discussed his candidacy with Trump, but White House spokeswoman Sarah Huckabee Sanders said in a statement that President Trump and Guo did not discuss support for his campaign in Taiwan. Guo, whose Foxconn technology is the main assembler of Apple's iPhones, told Trump that if elected, he would encourage Taiwanese investment in the United States. The two also discussed Foxconn's ever-changing Wisconsin plant, and Guo invited Trump to see the project when its production line opens next year. Shares of mobile game maker Zynga surged to a 7-year high after the company reported first quarter results that beat expectations. The company said sales grew to over $265 million and lifted its full-year guidance by $50 million due to the strength of recently acquired games like Empires and Puzzles and Merge Dragons. Joining us to discuss, Zynga's CEO, Frank Gibeau. Frank, good to have you back.
Great to be here.
So what do you think's driving the stock?
You know, I think we've got an underlying strategy that's really working with players. We have 5 forever franchises, which are the games that you mentioned, plus Words with Friends and CSR2 Racing. The mobile market overall is growing very rapidly, and our games are really benefiting from the live services orientation that we have to building and growing them.
So obviously we've got bigger players getting more serious about gaming, Google and Apple. Where will that leave smaller game makers like you?
Well, I think what's important to note is that the gaming business right now is about $140 billion big. And it's global. It reaches every part of the world now because mobile is in everybody's lives now. When you look at how Apple, Amazon, Google is starting to come in, there's always been Microsoft, there's always been Sony, Nintendo. It's a big marketplace with lots of different platforms. And so companies such as Zynga are very nimble. We're very focused on free-to-play mobile. And there's ways that we can grow that the big guys just can't. And so when you look at Facebook, if you look at how Snap is now starting to build out in games, you can go to lots of different platforms to reach big audiences, and that's what we've been doing. We've been publishing games across a lot of different platforms, focusing on our big ideas, and we're doing very well right now.
Now, talk to us about some of the new game releases. You alluded to timing, but if you could tell us any more on when we'll see some of these new games, please do.
Sure. Right now, we're working with the 5 games that we have out right now, but we also just put a Game of Thrones title into test, as well as a new game called Puzzle Combat. In the future, you'll see Harry Potter products coming from us, Star Wars. We are going to be bringing back Farmville, as well as Cityville, some of the famous titles from Zynga's past. And those new games will layer in with the existing live services portfolio we have, and so we continue to see great opportunity to grow this year and a lot of success in the future.
So will we see these new games this year?
You'll see them in the second half. They'll start to go into soft launch and still go to full release.
Okay. So you also said recently that you'd be open to a subscription service. Tell us about that.
Well, I think subscriptions is a great way for players to really build a relationship with a game over time. And so right now you have 2 basic business models in gaming. You've got premium games and freemium with a little bit of advertising. Subscriptions are working in other entertainment media forms, and so the fact that it's coming to gaming is really kind of expected. It'll probably be really messy initially on how subscriptions work. You'll have platform subscriptions, you'll have franchise subscriptions. And I think for Zynga, we have a couple of games like Words with Friends and others that have the potential to put subscriptions in front of players that I think they'll really like.
So you've made a string of acquisitions lately. What will we see you doing with your excess cash now? Will we see buybacks? Will we see more M&A?
I think what you'll see from us is more growth-oriented M&A. We do have a buyback in place, but when we look at the overall marketplace, there's so much opportunity in mobile right now, and there's development teams all over the world with great franchises and new markets to really break into. So from the standpoint of how we're going to grow Zynga going forward, we really like to go that route.
So what kind of M&A will we see?
I think you'll see us focusing on new teams, game teams, forever franchises like what we've done with Empires and Puzzles and Merge Dragons. But we have a very wide open approach here. I mean, there's new categories opening up all the time, like chat games in the West, new categories, new markets like India and others that we'll be very inquisitive about because the global marketplace for mobile is so rich and powerful right now. You can grow in lots of different ways.
So what sort of opportunities do you see for Zynga on Google and Apple's new platforms?
In terms of their new services, I think that there's some underlying technology in them that are really interesting to us that we think will be great, which is the streaming, the cross-platform play. In terms of participating in their services tied to the subscription, I think you'll see Zynga kind of go its own route there. And in looking at the overall gaming business, things like 5G, streaming, cross-platform play will be strong growth drivers for the overall industry, but they're not necessarily tied to just Apple and Google. I think they'll be industry-wide.
So when you look, I mean, obviously there's a lot of change happening in the gaming industry. You know, what does this industry look like in, let's say, 3 years?
I think you're going to continue to see strong double-digit growth. Every day, interactive entertainment reaches new highs. It opens up new markets. In mobile, you have very high-performance smart devices going out into the emerging markets. So we're serving over 150 countries with some of our games now, whereas before it was always the U.S., Japan, and Western Europe. So we're very excited about the proliferation of these very high-performance devices. The new technologies on the horizon, like 5G and streaming, cross-platform play, will make better games, better distribution models, and frankly, a better user experience. So it's not surprising to think that in 5 to 10 years, gaming is going to be even bigger.
All right, Frank Chabot, CEO of Zynga. Good to have you back.
Thank you.
Thank you. Still ahead, the home to the world's tallest building also boasts the world's first minister for artificial intelligence. Bloomberg's conversation with said minister about his ambitious plans to make the United Arab Emirates the global leader in AI. This is Bloomberg. The United Arab Emirates is a country that prides itself on building big and being first. And that extends to the tech sector with the UAE's appointment of the world's first minister for artificial intelligence. Behind the ministry's creation is the Emirates' lofty ambition to be the global leader in AI and for that commitment to boost the UAE's GDP by 35% by 2031. Bloomberg's Manis Krani spoke with the Minister of Artificial Intelligence about the nation's AI strategy and how it has impacted the economy.
Let's not talk about businesses that are starting, let's talk about proven businesses. So some of our most successful exits so far are artificial intelligence stories of success. Kareem is an artificial intelligence company that got acquired for 11 billion dirhams, 3.1 or 3.2 billion dollars. Souk.com got acquired by Amazon for more than 2 billion dirhams, and Media.net got acquired for more than 3 billion dirhams. These are all artificial intelligence companies in their core, and these are probably the proof that our leadership has been working on this for years. We have created the right ecosystem, we have attracted the right talent, and today these success stories are coming out.
Do you think that Kareem and Souk.com, do you think that those businesses act as an inspiration for the next generation of Emiratis to give it a go for themselves in AI and evolve?
Definitely, and it also proves that there is something to be got out of it. We're not doing AI for the sake of AI. We're doing AI because it's something that creates value, and there are returns that make it tangible and feasible as well to do.
From an economic and an employment aspect, there is also that thought at the back of everybody's mind, AI will reduce the employment opportunities. How do you manage that perception?
So every single technological innovation, every single advancement has cost jobs, whether that's one job or 100,000 jobs. The job of governments is to do one of two things: upskill people that will lose their jobs and ensure that people don't go into jobs that are going to be lost. So this is what we are doing here. We are mapping out all the jobs that we are graduating people in, all the jobs that are going to be lost, and then either upskilling these people into other jobs or making sure that we don't have graduates going into fields that are going to be lost.
We have a smart city. Dubai is known around the world for that brand. How will AI, how will your ministry play into the smart city evolution?
The idea is we want to become the smartest city. Through AI, we want to make sure that all decision making is done in a very efficient manner, in a timely manner, and the right decisions are being made. Because a wrong decision can cost billions. A wrong decision can really impact people's lives negatively. So that's the first thing. The second is we want the government here to be proactive in delivering services. We want the government here to tailor services to the needs of the citizen or the resident or the tourist of the UAE.
And is the government prepared to be experimental with AI in the delivery?
We already are. So we launched something called the Reg Lab recently, which is a lab that changes the regulations for 6-month periods, where we are able to put a regulation for six months, see the impact of the technology while we do the proof of concept in a controlled environment, and then if it is good, we expand that and make it into law. So we are trying to experiment already, and we're becoming a test bed for the world in the UAE. They're coming from around the world and implementing it in the UAE.
That was Omar bin Sultan Al Olama, Minister of State for Artificial Intelligence in the UAE. And that does it for this edition of Bloomberg Technology. Remember, we are live streaming on Twitter. Check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.